buying U.S. oil and gas companies, pushing them to revolt against the pressure to cut back on energy production. He joins me right now. Vivek, great to have you. Congrats on the new ETF. You know, I want you to know that I spoke with Missouri Attorney General Eric Schmidt this week. He and 18 other state attorneys general sent a letter to BlackRock's Larry Fink demanding answers about the firm's focus on climate investing and the impact on investors. Take a listen to what Eric Schmidt told me. Watch.
There's a common theme here, which is a government that's completely out of control. And so, you know, what they're trying to do is to force these companies to adopt their woke ideology, abandon their duty as a fiduciary, right, to get the best return for investors. So this is a serious issue.
Vivek, you're on a similar crusade here. Tell us about your ETF.
There's two prongs to the solution. One is through actually states being able to take action. The other is through the market. That's the prong I'm focused on. I'm really glad those state AGs are focused where they are, but there also need to be market solutions. So, Maria, what we did is this is our first ETF at Strive. It is a U.S. energy index fund, and it's really simple in its key difference. It mandates U.S. energy companies, including oil and gas companies, to drill, to frack, to do whatever allows them to be most successful over the long run without regard to any other environmental or social agenda. Because what's happening today is, over the last 5 years in particular, the largest asset managers in the world, like BlackRock, have used the money of everyday citizens to tell these companies to advance social and political environmental agendas that most of those everyday citizens do not agree with. I think that's a fiduciary breach, but at the end of the day, the solution wasn't just to complain about it. It was to do something about it by creating a vehicle for owning the market, in this case, starting with energy stocks, but to deliver a different voice that both better represent the will of everyday citizens who are investing in the market, but also, hopefully, Maria, unlock the potential of the U.S. energy sector, which trades at a lower multiple than the rest of the market today, than the S&P 500, but could trade at a much higher multiple if it takes these ESG handcuffs off of their behavior. So that's the point.
Yeah, that is right. And, you know, many investors don't even know. They're not aware that it's Larry Fink's rules, that he's doing the voting, whether they like it or know it or not. And by the way, we should point out that oil stocks have been among the best performers. So you've got that on your side as well. Your top 10 holdings include companies like ExxonMobil, Chevron, ConocoPhillips, EOG Resources, Occidental Petroleum, Schlumberger. Good for you, Vivek. Your fund is doing incredibly well. What kind of a reception have you gotten from this?
I mean, the reception's we've been grateful, incredibly positive. I'm told that it's actually one of the top ETF launches of its kind in the year, in recent years even. But I think that reflects the will of the everyday citizen to be represented properly in corporate America's boardrooms. Because you're right, most people don't know. But as they start to know, they say that, you know what, I don't want my money abused by some other asset manager that is speaking on my behalf, mandating companies to do things that I don't want them to be doing. I don't want to be paying $5 gas with one hand and have my 401k account subsidize it with the other, but without me knowing what's going on. And you know, the funny thing is, you're right, the energy sector has actually started to turn around this year. But a funny fact, Maria, is between June of 2018 and the end of last month, July of this year, energy profits outpaced those of U.S. tech companies, but energy stock prices trailed U.S. tech companies dramatically. Why is that? It's because this ESG-linked asset management industry, what it does is it applies low price to earnings multiples to energy companies, saying that, hey, there's going to be this great energy transition. There's going to be no fossil fuels after 2030. What we're saying is let's wake up to the reality that fossil fuels aren't going anywhere anytime soon. And actually, if U.S. energy companies step into the void, fill the supply-demand imbalance right now, that can be an opportunity for U.S. energy companies to actually thrive. But in order to do it, they need new shareholders delivering a new mandate. And I will tell you, just this week, I spoke to one of the largest conferences of oil and gas CEOs and executives in Denver. They are hungry for this message. They're not like the employees of Twitter who want to resist what a new shareholder might tell them to do. These employees are waiting in the wings to be able to go in this new direction. My general view is, if you're an asset manager, if you're a fiduciary, be honest about what you stand for and what you don't. Don't try to be everything to everyone at the same time. And you know what? There may be people in states like California or New York or pension funds there that say that we want to advance environmental agendas with our money. You know what I say? Great. Strive is not going to be a good home for your capital. We respect your decision to go elsewhere. But at the same time, we do say who we do stand for is people who want to deliver a message to American companies, including American energy companies, to say that focus on excellence over politics or any other agenda. And I think that honesty is what we're missing in capital markets. And I think government at its best is actually asking for people to just be frank about what they stand for and what they don't. So, you know, Maria, as we get bigger, I'll keep you posted in terms of what we hear. But so far, we're keeping it simple.
Vivek Ramaswamy joining us. Thank you, sir.